First of all, I have to ask you about the closing state of play on Wall Street. We've now learnt that Senate Democrats have the votes to shut down the government over DACA. Is that why we saw Wall Street closing lower today?
Oh, I think there's always a little bit of uncertainty, but I think more their concern over the little rise we've had in treasuries, and also we did have a couple of earnings that were disappointing, such as Alcoa, for example. So I think it's a little nervousness on the market's part before we start to see the wave of earnings for the fourth quarter, full year of 2017.
So we saw the Dow holding onto that 26,000 level, but it still closed lower. Is there a pullback risk here in your view, though, if policymakers aren't able to get that funding bill passed?
Well, that would be is something that would really rattle the market, but they've come right to the brink time after time, and in the end, it's in everybody's interest to get a budget deal. So I expect we will not have a government shutdown. We'll go right to the edge, and then magically they'll have an agreement, and then I think the market will focus more on the quarterly earnings.
Okay, so tell me about your outlook moving forward. Your own view is that equity markets will continue to rise from this point on. So where should investors be putting their money in this rising interest rate environment where some analysts have also argued that valuations are looking stretched?
Well, I don't think evaluations look stretched. I think they look more or less average. And I think as long as we have earnings growth of, call it 10% this year, which is what I'm expecting, I think that will allow the market to once again have a double-digit return. I think many people are looking and hoping for that correction. And so I think there's a lot of money on the sidelines, fundamental money that could come in. And I think the themes that will continue to work will be the growth areas of the market, which have worked so well for the last few years. So that would be technology, that would be in the healthcare sector, the tools and devices. And I think we'll continue to see industrial companies do well because they will benefit from higher capital expenditures, not only in the U.S., but also around the world where this grows. So those are the themes that I'm looking for 2018.
So some of those sectors have had significant runs already, though. You're not worried about valuations in the space, and perhaps when it comes to tech in particular, those companies starting to look quite expensive.
Well, certainly it's not an undiscovered sector, but I think that it's also the sector that should continue to have sustained growth over the next few years. And I think that this will be a year where people will continue to look for growth. I think the growth areas will prevail in the market rather than the value areas, which have been a little undervalued, but I think they'll continue to be undervalued. I think people will continue to look for higher growing companies with earnings that will sustain those valuations.